where unemployment rate has risen to 27.6%, a near 15-year high. Chief Investment Officer and Inkunzi investment owner Owen Nkomo joins us now for more. Owen, a very good evening to you. So as I mentioned, a near 15-year high. Economists surely were expecting this, that they're not surprised by this. Was it by this margin though?
Yeah, it's good evening to you, Tapiso. It's an unfortunate number to be getting, but it's a sign of the times that we've been living in for the past several years, where there's growth being very stagnant, and unemployment is, obviously one of those things that have been the Achilles tendon for our economy for the past few years. 27.6% is quite high, and I think it will take a lot for us to actually reverse that number.
And as you say, Owen, I mean, this has been the figure below 20% since at least 2000. What are the prospects of a turnaround?
Well, look, I guess the government that is in charge at the moment obviously has to give us a strategy in terms of how they want to drive the economy going forward. Unfortunately for us, we've had NDP, we have all these strategies, all these economic programs that were supposed to drive the economy, that we pick up and then we drop and we don't talk about, and we focus on other things, and we don't incentivize foreign investors and local investors go out and start spending money in creating the much needed jobs that the country would actually have to deliver in order to see the unemployment numbers come down. I am hoping that President Ramaphosa is going to come with a very clear plan that will help us see unemployment start to tick higher again, or rather start to tick lower. We need to be creating more jobs. We need to see smaller companies being given capital in order for them to grow. And we know that most of the small companies, or rather the biggest employer in South Africa, besides government, is small business. So a strong focus and a clear strategy to help small business continue to create jobs is what the government needs to do.
I mean, we've got a department that's focus is clearly that, and GDP hasn't grown beyond 2% since 2013. It's been said that we need to spike consumption. How do we do that under the current circumstances?
It's quite a challenge because we also have global economic growth starting to slow down. Chinese growth is starting to slow down. Only America is growing at the moment. I think we need to go back to the drawing board as South Africa. What convinced me that South Africa was on a good trajectory last year was the fact that the president managed to get some money or some pledges from the international investors that he spoke to through the various initiatives that he set up. So one hopes that those initiatives can now start getting converted to cash in South Africa, where this money is deployed to create new factories. We're finding new markets where, as I've said, we focus on making sure that small businesses get the opportunity to hire people. And I think, the government procurement facilities as well, the government department need, in my view, to accommodate more of these small businesses and give them a chance to grow. And that's one of the ways that the economy can start to see a lower number when we talk about unemployment.
But Owen, how do we do that when a lot of the job losses occurred in the formal sector, and there's always been a concentration on investing more in the formal sector and not in the informal sector? So if we're to boost the services industry, for instance, perhaps should we change our thinking? And people are saying we need to invest more in education, but that seems to be a more medium to long-term solution. Are we in a debt trap that we can't get out of?
Look, the problem is that the world is changing in terms of industries. We're starting to talk about the fourth industrial revolution. We are seeing it already in the country where, if you keep it at a basic level, if you're talking about the service industry, the number of people that need to be employed in the service industry is also going to be affected by technology. Case in point, Standard Bank laying off people, closing branches because people don't need to go into branches anymore. They do all their banking on their devices. We need to start thinking outside the box, and perhaps maybe start going back to a position where we invest aggressively in supporting agriculture. And, agriculture obviously is a high employer of people, but the seasonality of agriculture is a challenge. We need to start thinking about doing agriculture outside of South Africa and supporting the rest of the continent, and at the same time bringing back capital to invest in South African land. As we keep talking about getting land back, that money we need to promote the small farmer and finding markets for those small farmers, in my view, will help us start to deal with some of those unemployment numbers, so in my view. And at the same time, focusing on manufacturing and trying to move away from mining, which in my view is a dying industry or sector, because people are now using a lot of technology globally. And the challenge we have in South Africa is that we are a relatively labor-friendly market, which means we will struggle to see the implementation of capital, or rather of technology in these mines, which will actually help lead to efficiency, and which will lead people to realize that we need to invest in other sectors that can employ more people, Tsebiso.
And of course, we'll continue that conversation later on after 7 about how creative can we get. Owen Nkomo of Nkomo Investments. And let's take you back to Stephen now.